What's up guys, if you're new to the channel, my name's Jason. Today, Netflix is going to be the stock that we're talking about. But before we get into analyzing the stock, I just want to say that I've recently started college, so I'm not sure how often I'll be able to upload. I might have to do 1 to 2 times a week because every 3 days right now I've been uploading. So I'm not sure if I'm going to be able to continue that just because I want to have that little gap day where I can do something for college or study or just have a little bit of free time. But with that being said, let's get into the analysis. If you don't know who Netflix is, you have to be either living under a rock, a boomer, or both. But I'll explain for you guys as quick as possible. They're basically a subscription streaming service where you can pay anywhere from $9 to $16 a month in order to watch a bunch of movies and TV shows and stuff like that without watching a single ad. And this is a very big disruptor to cable TV in my eyes and many other people's eyes. Because when it comes down to it, every TV channel needs ads to make money from the programs they're showing on that specific channel. And now that I've explained that, let's take a look at the stock itself. Right now, Netflix is trading at a price of $516.05 and is trading at a market cap of $227 billion. And they've been consolidating for the past almost 2 months now, and recently they've actually been downtrending along with the broader market. But the run-up in its stock that it's had from the bottom in March till now seems like more of a healthy one. More of a healthy one compared to someone like Tesla. Now, obviously, disruption has played a major part in the run-up that the stock has had in the past 5 to 10 years. But in the short term, it's actually ran up a good amount because everyone has been inside. So you can probably assume what people are going to be doing inside if they really don't have anything to do. During the shutdown because of the Rona, a lot of people obviously bought Netflix account while inside. Like, they really didn't have anything to do outside because everything was shut down, like I just said. And you can see this when Netflix had a little spike in new customers in the first quarter with over 15 million, but then went back to its normal average growth rate for the next quarter. Because the US started most of the shutdowns towards the end of Q1, most of the economic damage was done during Q2 of this year. But in other news, Netflix's growth and improvements to its platform could be something that I could see bring this company to a $500 billion valuation in the future. But this is obviously with them continuing to add new features to their platform as well as new shows and movies. But the thing that I see being hard for this company in the future is them continuing to sustain the growth that they've been having. As of now, analysts expect them to grow by over 20% for the remainder of the year, with them growing at 21% for this quarter, which is Q3, and 20% even for Q4 of this year, which is going to bring the total growth for the current year to an average of 23% for a $250 billion company. And next year, they're still expected to grow by 17%. And I'm saying this type of growth will be hard to continue 3-4 years down the line because they can only have so much market share with companies like Amazon, Disney with their Hulu platform, and Apple with Apple TV, even though they all offer different shows and movies. But if being able to maintain the type of growth that your company is having is one of your bigger problems, then I think you're in pretty good shape. But to help maintain this type of growth, I think that Netflix should actually kind of copy Hulu by adding a $5 subscription where you can actually watch all the shows but with ads. Because I know that some people may be choosing Hulu over Netflix just because of the affordability of the product. Even if they sell them at a loss, as people get more and more used to using Netflix, whether it be on a daily basis or a weekly basis, over time, you can up the price of the subscription, whether it be by 50 cents to $1. And doing something like this could raise up to hundreds of millions of dollars of revenue for the company. And I bet that this is something that a bunch of analysts, investors, and Wall Street will enjoy. If you made it this far though, please don't forget to hit that like and subscribe button. It means a lot. But with that being said, let's take a quick look at their balance sheet. Looking at their cash on hand as of the end of Q2 of this year, they have $7.1 billion in cash, which is about 3% of the total value of their company. So no comment on that one. But when compared to the debt they have over $15.5 billion in debt. And I'm not gonna lie, that's pretty bad. As some of you may know, I own Tesla and they have pretty close to that same type of cash to debt ratio. And although I think that it's a lot easier for Elon Musk and Tesla to raise cash than Netflix, I still think it is pretty bad of Tesla to have that type of balance sheet. But it's a good thing that all of Netflix's debt isn't short term because that raised a lot of eyes on whether they could pay it off or not. As they grow as a company though, I think that they'll end up reducing their cash to debt ratio. So if you're a long-term investor, I don't think that this is something that you should really be stressing about. And that's about it for this video. If you made it this far, thank you so much for watching. Also, don't forget to hit that like and subscribe button to support the channel. It means a lot. I also wonder what you guys think about Netflix. Are you buying? Are you waiting to buy? Are you selling because of the market sell-off? I'm actually curious, so comment that down below. But with that being said, I'll catch you guys in the next one. Peace.
Bye.